Good morning. Welcome to Admiral Markets. My name is Chris. Today's focus is going to be on price action, and we're going to focus mainly on the Forex market, but we can take a look at some commodities and stock indices. First of all, be aware that this webinar is shown to a global audience. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more if it is suitable for you and other details and conditions. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you are aware of the risk involved when trading. So today we're going to take a look at price action, candlestick patterns. We're going to look at candles, the closes, the lows, the opens, the highs, and compare them to the previous candles and see what kind of information we can derive from that. Just in general, we in this webinar tend to focus on discretionary analysis using trend and momentum definitions. So we can use the candles, in fact, to decide that. You can use other things too, like moving averages and trend channels, for instance. Then we look at opportunities, patterns, for instance, Fibonacci levels. Today's primary focus will be price action, though. But typically, we would look at these things. Candles can also be used for opportunities. Then we check for filters. Filters are support and resistance levels that could stop the trend or momentum for continuing. And then last but not least, I'm looking at, is it interesting to trade and from where to what direction, what kind of reward to risk, what is the trigger, what am I specifically looking for at a certain price zone before I'm trading it. If you're interested in price action, we do have a two-part series on price action strategies. Last week, Thursday, was part 1. This week, Thursday, is part 2. That's June 9th at 4 p.m. GMT time. If you're interested in looking at the first video, you can find it on Admiral Markets YouTube channel by going to youtube.com, and you'll find it by looking for Admiral Markets YouTube channel. All right. So regarding the calendar, yesterday we had Aussie news. In fact, interest rates stayed the same. So we basically saw a big move up on the Aussie as a reaction. What else do we have left? We got an interest rate decision in India. We have some lighter news events, but the red tag is GDP growth in Eurozone and CAD news. All right, let's move on. Let's take a look at the Eurodollar first of all. Already. Now, yesterday, I don't know if you watched my weekly video by any chance, but if you haven't, you can find it on YouTube too, on the Admiral Markets YouTube channel, or you can go to Analytics, Wave Analysis on Monday around 10 a.m., typically Central European time, maybe a bit earlier or later sometimes, but you'll find this video, all right? And this video discussed the Eurodollar, pound, Aussie, dollar, yen. Yesterday I was saying I'm looking for retracement of Friday's big bullish move. Obviously, Friday was clear in its price action, very strong bullish. It was really a big move. It was NFP, and the NFP figure itself came in lower than expected. Unemployment rate did also move down, but the price action was obviously bullish. If you look at the daily candle, look at this big candle relative to the candles we had prior to that. This is a 200 plus pip candle. The close is right at the high. This is literally only a few pips away. Let's take a look. The candle high is, let's see, 1.3 pip. So let's just call it a pip away from the high, whereas the candle itself is 220 pips. So if we divide 1 by 220, obviously it's nothing. Everything that is within 5%, all right, the close is within 5% of the higher low is extremely strong. It means that the bulls or bears, in this case the bulls, have a very clear control of that candle, no doubt. All right, now 10% is very is excellent. Okay, 5% is amazing, 10% is excellent, 20% is good, 30% is okay. It depends on context a bit to get more information. All right, so let's see. Yes, good morning, Evaldas. Good to see you, and good morning, Zitan. Good question, by the way, on LA Wave. But if you don't mind, please stay with me, and then I'll talk about that question just a bit later. Okay? Maybe 40 minutes from now, if that's okay, because I'd like to focus on price action first. But very good question, and you can actually use the MACD and the Awesome Oscillator for deciding waves, indeed. All right, so yesterday was a bit of an indecision candle. We got wicks on both sides, a small body, small candle. So it's a typical Monday candle. But for me, this particular daily candle is still dominant. It's still the master candle. It's still dominant in its projection of power, let's say. I don't know, for lack of a better way to describe it. If you look for a weekly candle too, look at this reasonable size. I mean, it's not a massive, it's normal size candle, but the close right at the high, there's really literally no wick at all. Very powerful candle as well. Bulls clearly in control. So I think we can, from this point of view, if we look at our slides, what is step one is the trend or momentum. I think we can clearly say momentum is up at the moment on the Eurodollar on these two time frames. So let's take a look at the 4-hour chart. Is there momentum at this point? And I don't think so. I don't think that this is momentum. This is going sideways at this point. Price is going like this. There's still a candle that's in control, which is this. All right, because this is I would say still the high and the low that's dominant at this point. And pretty sizable candle, close near the high. All right, so I think that's looking pretty bullish. Now, I can't say that there's a trend. So I think from this point of view, 4-hour chart is the best to look for a continuation. I would like to see preferably price break below, I need price, to break above these doji highs. These doji highs right here. I need to close on a 4-hour chart like this with a sizable distance. That means at least 30 pips, all right? Candle with at least 30 pips. So the candle has to close around 113.80 with a close that's near the high. So the candle has to look like this. All right? That's how it has to look like on the 4-hour chart. If we get a candle like that with a wick that's not more, if the candle is 30 pips, then the wick cannot be more, shouldn't be more than 6 pips, I guess, 20% away from the high, okay? So if we get that candle, I think that's a good continuation signal. We have daily up, weekly up, so I think that the 4-hour is a confirmation of continuation in that case. So this is what I would be looking for. Now, if we do get the follow through, then what stop loss would I be thinking of? I would be thinking about a stop loss below 113.20, 113.17, probably 15, which would add up to about probably around a 60 pip stop loss. So what is the target? The target, in my opinion, is, all right, 114 is pretty close by. That's the only annoying part. I would say the target is 114.70, about 90 pips. But we have to only deal with the problem of the 272 target. So from that perspective, I would be, if we get a next 4-hour candle, let's say we got a good 4-hour candle here, all right? And we get a next 4-hour candle that is something like this. I would move the stop loss to the next candle low, a couple of pips below it, really, 3 pips only. That should reduce the risk right away down to 25 pips or so, I guess, 20 maybe. And trail stop all of those candles because just because of this target. All right. Now you can see why we need that on the 4-hour chart. Oh, sorry, I just deleted it by accident. All right, let's see. There we go. So you can see why we need that break because some traders will be saying probably, look, this could be a head and shoulders. And true, it might be. But considering the strong momentum and the strong bullish candles, more likely actually is that this is a consolidation for upside. However, it doesn't mean that price could not retrace lower. It could retrace deeper, and it could go, for instance, depending on how you fib this, to the 113, 38.2 fib, 112.75 area before it bounces again, which would be another interesting spot for a long. All right, if it gets to a retracement level like that. In that case, I think an probably hourly candlestick pattern at the 38.2 is enough. So let's say we got bearish candles like this, and then we got a touch of the 38.2 fib, and either you have a pin bar, for instance, like this. Well, like this, for instance, something like that, or you got engulfing twins on top of that. Something like this is what I would be waiting for. All right, so let's take a look at the pound USD now. All right, weekly candle, I don't think there's really any trend going on at this point. Those two candles have closes within each other's, candles. The highs and lows are roughly equal. Actually, if you look at the whole weekly candles, they just look going like sideways. So that looks like a range. There's no trend. All right, daily chart, same thing really. Pretty big consolidation, in fact. So let's take a look at the 4-hour chart. We got a big wick recently, or just a few hours ago. We got a big upside. Honestly, I'm not a big fan of this candle because there's a big wick, but it still ended up bullish. And there's a big range, and price is halfway that range. So from this point of view, I don't see much interesting. So I would skip, just based on this, I would skip the pound at the moment. I would like to get more information about the structure of this, the trend. Sorry, I just moved back the Eurodollar to the start of my workspace here. As I said, I just deleted it. Give me 1 second. So I'm not a big fan of this pound dollar. Oh, I like the Eurodollar a lot more. Now I lost my Eurodollar again. How's that possible? Ah. All right, never mind. Dollar yen. So dollar yen is definitely strong bearish momentum. We have a daily candle that closed near the high and a bullish candle. So I think that could be the bounce that I'm looking for. Strong weekly candle. That's true, which makes things a bit scary. And dollar yen is a bit of a mixed bag at this point because of that. Daily was down, now up. Weekly is still down. 4-hour is up, but candles are pretty small. And we just barely managed to push through this candle high, which is important. Which is important, but still, this is from a chart pattern point of view. It could be the start of a trend, or it could be a bear flag, right? So I think at this moment there's still more of a chance of a bounce, but you can see there's a lot of mixed pictures here. On a 50-minute chart, I think it could be good. So potentially, but we got 1-hour candles that are bearish, in fact. 4 hour candle is still bullish though. Let's put a line here at these lows. We've got still, I think, a decent chance of this being a retracement. The moving averages are bullishly aligned here, as you can see in the indicator. So I think this could be a bouncing spot, but on a lower time frame. It's a risky one because there's a lot of, the trend is quite strongly mixed. But if there is a bullish reaction to this zone here with a good candle price action reaction here, it could be worth it. So we can keep an eye on it throughout our session. Aussie, yesterday I talked about Aussie yesterday. You can see a great example of what I want to see basically on the Eurodollar. That's this bullish candle right in here. Yesterday I said we were basically looking at this small doji. I said I want a candle close that is above this candle high, and with the close near the high. So that's exactly what we got. Look at that. It's a perfect example for what you're looking for. Right next to this vertical line, that is the bar that closed basically above that candle high with the close near the high. So that's perfect. Right? Anyone taking that trade? Of course, there was the Aussie news event interest rate. So from that point of view, anyone who skipped it makes a lot of sense. Was a wise decision to do so. But the technicals did persevere. Let's say did manifest itself, or I don't know how to say it. It did prove correctly that that the psychology was up, and we got a bit of struggle here, but eventually now the trade is up 75 pips. So anyone who did take it, despite the news event, I would recommend to put the stop loss below this candle low at 73.53, or even just at break even, and let this trade go. Now, target is 75, first target, 76 or 77. So target is still open, but the trade is out of risk, so that's great. So how about now? That was yesterday's trade in the one I was talking about in the Forex video. Now, if you look at weekly candle, strong weekly candle, engulfing twins, closed at a high, beautiful, beautiful momentum candle. Daily 2 as well, so that's why yesterday I was recommending going long, just based on that, just looking at that momentum. Same scenarios as the Eurodollar, strong. 4-hour chart, again, momentum is up. So let's even dive into the hourly chart, all right? Again, momentum, strong, momentum candle. So we can probably even go further, 50-minute chart. How do you set the target for the Aussie? Good question. We'll dive into that in just a second. Now, obviously, we need a bit of pullback, the same what we had on the Aussie. Pullback continuation here is very useful. You don't necessarily need that. I mean, if you are trading the weekly chart, for instance, this you could have taken it right at the candle close or at the open of this week with a stop loss below that candle. That could have been a swing setup. So you don't need necessarily a pullback. The reason, in this case, the reason is because this was the pullback, and this is the confirmation of the continuation that we had here of this momentum with the green arrow. Now, the difference between the setup basically yesterday or the weekly candle or even the 4-hour candle here is that price is already on its way. So I don't like to take the continuation of the continuation of the continuation. You want to always have a bit of a pullback wherever, if the price has already continued like this, right? So I think that just putting a fib probably on that hourly candle at this point makes the most sense. All right, let's take a look at the 15. All right, strong 50-minute candle. Now, it might not even get to these fibs, to be honest, and it could just continue. But eventually, we're going to get a retracement. Let's take a look at the 5. This has gone really pretty far since that news event. But considering momentum, there is a good chance that price will just keep pushing. So from that perspective, it could be even worth taking a look if price, let's see. Yeah, this candle low might not get broken due to the strong 50-minute candle right here. That could be enough to hold price as it is. So from that perspective, I'm not interested in trading necessarily only at these fibs. Those would be great. But if price makes a bit of a dip and then shows a bullish 50-minute candle at support, that could be already good as well. Or alternatively, if price shows another 50-minute candle, because this is a bit of a sideways zone, right here, these three candles. So if it pushes with the close above the purple line, like this, then that could be a continuation as well. So we can keep an eye on this 50-minute chart. At this moment, everything else is trending. Everything is pushing with higher highs and higher lows. Look at these candle highs. Look at the candle closes. Everything is in a trend. Everything is higher highs, higher lows. All time frames. Even the 4-hour chart, everything. So this is a massive trend. All right, so regarding the targets, okay? Now, for price action, if you don't want to use fibs, what you want to be doing is looking for support or resistance. If you don't want to use any indicators, then you want to look for natural tops and bottoms. This is always the easiest, and round levels. So here we have a bottom, and it's equal to the 75 level. So that's the easy one. 75 is a target, right? If you're looking for a next level that could provide a bit of difficulties, it could be these candle closes right here in lows, for instance, right? And the top here, looking for kind of confluence levels, looking at the left of the chart. So what is this? This is 75, 75. This is 77, 25, close to 76 and 77 round levels too. So that's what you want to be aware of. If you do want to, if you're okay with using, oh, sorry. There we go. So let me take off this fib. Thanks. Thanks, C10, for that. So yeah, I was talking about these bottoms here. If you don't want to use any indicators, for instance. And I was talking about then this candle close, there's kind of a supply-demand zone right here. So the bottom of that is resistance, the top of that, as well as these levels here, and of course the top. So those are a couple of levels to think about, plus the round levels. Which is the main target is always a bit difficult to say. Price depends on how much momentum we see when price is moving up. If there's strong momentum, then there's a good chance the price will go up to the next target. If momentum is weakening and the candles are smaller, if the candles close not as close to the high anymore, then momentum is weakening, and then the next target is probably the best spot to exit. It's always this battle between momentum and support and resistance. So if momentum is strong, then it will beat support and resistance. If momentum is weakening, then it will lose against it. All right? Throwing some mathematical equations at you. So that's the target. All right? So from this perspective, if you do like fibs, just put a fib from here to here, and you can look for resistance fibs like the 50, the 61, and the 78.6 fib. More or less at the same levels. So there's confluence. That's great. Or you can look for pivot points, obviously. All right, so that's a look at the major four. Let me recap quickly. Let me quickly open the Eurodollar chart here. So Eurodollar is trending, from my perspective, mainly on the daily chart, not so much on the weekly, to be honest, because when we look at the weekly chart, yikes. I'm not saying that this is not a good candle, but I don't think it's okay. It could be even trending. It's not a strong trend, though. I think it's more of a daily bounce So I'm looking for a 4-hour continuation. That's my main idea on the euro dollar. So let's see, price is moving up as we speak, trying to challenge that purple line I have on the chart. So we'll find out soon. Pound USD. If there's any trend, it's up on the 4 and 1 hour, but there's a big wick, so I don't like that too much. Once again, summary on the dollar yen. Dollar yen is showing downside on daily and or weekly, let's say, right? But it is showing momentum on this upside on the hourly, on the smaller time frames. All right, so let's see how this closes 4 more minutes from now. We can check. At this moment, you can see that the momentum is down on the 50-minute chart. So it would be good to have a break above the candle high, for instance. If it closes above this purple line, above the previous candle, that could be a good engulfing twin as well. Bit of a mixed bag though, not as clear as the euro dollar. And last but not least, the Aussie is uptrend on all time frames, in fact, and you can literally go down to a 5-minute chart because everything is bullish for continuation. Oh, that's just what happened. All right, well, let's take a look. 5-minute candle. All right, so 50-minute candle not, but 5-minute does. Good candle close. So let's take a continuation trade here and try and keep an eye on price action as it develops. It's a bit risky. You could say buying, of course, an extreme momentum, but momentum tends to push up high. This is more of a scalping trade. And it's the breakout of the breakout of the breakout. That's always a bit risky, but all right. So next, let's take a look at the Kiwi. 50-minute chart could still also be good, by the way, to see if the candle closes indeed above this high. That could have been a bit better, perhaps. But anyhow, let's take a look at the Kiwi. Kiwi is up on a daily. Look at this strong candle too, very clear daily strong candle, just like the Aussie. 4-hour is in a correction, but we do have engulfing twins right here, so that looks like a good retracement to me. 1-hour chart has bullish candles as well. That looks like an uptrend. So it could be on basically based on a 50-minute chart or 4-hour chart, I think. 1 hour is trending, daily is trending. So 4-hour looks good, I think. I think that this could be good engulfing twins. We have a candle close that is near the high. We have engulfing twins. Decent sized candle. Let me see. It's not huge, but it's not small either. It's 35 pips, so that's okay. So the entry could have been here at 25. It's now at 34, which is only a few pips away. So let's see how this goes. I'll be trail stopping the candle lows. Put the stop loss below this wick at 85. 68.85. All right, let's take a look at targets. We got a big top in here. Otherwise, nothing from a fib perspective. 88.6 fib is the target. It's also 70 psychological level. So that would be the target. 69.90 or 92. All right, so the risk is about, let me check, is about close to 50. The target is a bit more than 50. 1-to-1 is not a great R2R, but and I'll be trail stopping the candle lows. I don't think it's a great 50-minute setup because I think it's going to make a pullback first on a 50-minute chart. We've got good hourly candles. But on a 50-minute chart, I think it's close to resistance. I think that a bit of a dip here before it continues makes more sense. So if it makes that dip and it shows engulfing twins down in here, it could be a 50-minute setup. All right. Next one. Dollar CAD, also bearish trend at this moment. Looking at this candle, very clear. Two bearish candles, closes near the low, strong candles. Obviously, strong price action is strong bearish, right? What else can we say? The candle closes are below the candle lows here. You can see clearly. Candle close below the candle low and the previous candle close. Everything is aligned. The candle high, everything downtrend, right? So that's clearly down at this point on the dollar CAD. The 4-hour chart is a downtrend too. All right. So I think from this perspective, the 1-hour chart was probably needed, right? Now that moved away already on the hourly chart. You can see a bit of a bear flag if you like chart patterns. And I think that a break below this could have been an entry. This candle low, or even a candle, even actually this candle right here, this candle right there. Breaking this kind of, this is a correction, so it's breaking this correction like that. Bearish candle, closing the low. That could have been a good entry candle right there. So anyone who took that retracement and continuation is up in pips. That's kind of similar to what I'm looking at on the Kiwi and Aussie, but on a different time frame, the hourly. But it's the same kind of stuff, right? You see small candles going to the upside, small corrective candles going to the upside here. You see bearish momentum, big bearish candles. Look at this piece. You see obviously that the majority of the candles are bearish, that the closes are near the low, that the bearish candles are sizable and big. The few bullish candles that are there are small. That indicates that the bears are in control. Now, then we get smaller bullish candles. It's a bit of a mixture as the price goes sideways. This is a correction. Why? Because the candles are small. There's a mixture of up and down candles. Plus, really, price doesn't even hardly, just barely pushes slightly through this candle high. Barely. So, from that perspective, it's definitely correction. We're looking for a continuation signal. We're looking for a strong candle that could show that. And this is, I think, qualifying. All right, so that was on the dollar CAD. Let's take a look at the same could be said for the Kiwi, right? On the 4-hour chart. We got strong candles to the upside, momentum to the upside, candles near the high, sizable candles to the upside, smaller candles to the downside. Now we're seeing a correction, which is a mixture of candles, but the candles not even getting close to testing or breaking this momentum to the upside, at this moment at least. And then we get the continuation candle. All right, now you could have said that about these two. So that's always a bit risky to use a candle low like this so early on. But in this case, I think because price has retraced down to at the 38.2 fib, I'm more confident in putting the stop loss here. At this point, price was only at the 23.6 fib, and that would have been a bit riskier. So I think it's okay. All right, so but this trade is going to take some time. It's a 4-hour chart, so that will take some time. Alrighty, so let's take a look at which one do we want to look at now. We want to, yes, it's a bull flag. Definitely, it's a correction. You can see corrective candles going sideways like this. So it is absolutely a bull flag. It's a corrective chart pattern that is indicating a correction. At this moment, from an hourly perspective, it's not a great moment to buy because we're right at resistance. So, it could be better. I mean, from a price action point of view, candlestick pattern, it made sense. It made sense actually right at the candle close or the retracement. So I was just a bit late. It could have been a bit better price. All right, but from an hourly perspective, it could be better to let it dip back down in here and look for longs here, then zoom into the 15 and look for a bounce right there. That would probably be a bit better. All right, so that's so easy with price action. You see the momentum, you see the candles, you see everything lining up here. Candle closes near the high, strong candles, majority is bullish, sizable bullish candles, small bearish candles. Everything is aligning itself. All right. Next one, dollar CAD. We have a trend on Euro odd. For the rest, I don't see. I see a trend on dollar Swissy on the daily, but it's not that great. I see a trend on the Euro pound on the daily, but it's not so great. I think the best trend of all the pairs I normally look at is on the Euro odd. At this point, it too is basically showing momentum within this daily candle, breaking these candle lows. Now the close is not, this candle has not closed it yet, so that's a bit riskier, but 4 hour it did, as you can see. Hourly too, got a bit of a small bearish candles here. All right, so we see the Aussie weakening a bit. To me, this is the same like the Aussie, looking for a retracement for further continuation. This looks a bit different than the Aussie dollar, obviously, but perhaps the Aussie is not doing as good because I can see the Euro odd is moving up to the moment. So, you got good trend, just like the odd USD on almost all time frames here, but it could be better to wait for retracement, perhaps. Definitely on this one. Let's see what the Aussie is doing. Probably not so good. Let's see. Yeah, it would have been better to keep an eye on this 50-minute chart. That's my mistake, but you can see that there's a wick here, and it didn't close above these tops. So there's a bit of a push, but that didn't go anywhere. That's something you have to be careful of when trading breakouts. So we're getting a bit of retracement at this point, and I think we'll see a push through. Let's see. Either this candle high and low confluence here at 74.25 or close to it. If we do break it, then we might fall down to the 23.65 at 74.10 or 74. Now, if this hourly candle does close bearish at the top of the hour, then it could certainly retrace a bit more. Still stays bullish, the environment, but we could see a bit bigger retracement. So let's see how this 50-minute reacts, or 5-minute reacts to these support levels. Because for the rest, everything is an uptrend. And we can check tomorrow how this went, this analysis. But looking at all these time frames, looking at all these candles, I mean, the Aussie is very much in a bullish trend. So I would be surprised if we don't get continuation today. You never know. We can check it tomorrow again in our strategy webinar. I would say there's a good chance that there is a continuation. And I would be surprised if we don't get it. But, that's trading. You never know. But we'll find out tomorrow. All right, so let's see how the Aussie responds. Now, looking at Euro yen and pound yen, I don't think we talked about those. We see, oh, by the way, if you're in the Aussie from yesterday, I would just keep it here, by the way. That stop loss below this candle. All right, I wouldn't move it yet, unless this candle closes, this 4-hour candle closes. Then it's acceptable to move it below the candle low. All right, so pound yen and euro yen. Now, Euro yen is it is in a downtrend. Um, Look, you can clearly see it. Not only looking at the higher highs and higher lows, but looking at this weekly candle alone, right? It has if you use the weekly candle as a trend for intra-week this week, then you can see this is bearish. The close very near the low, pretty sizable candle. The candle close is below the low of the week before, and the close actually it's lower than anything we've seen before. So it's a continuation of the downtrend. But the daily, look at that, engulfing twins to the upside. So there's a bit of a mixed bag here. Let's take a look at the 4-hour. We see bullish candles. And we could safely say that this momentum is over. All right. Why? Because basically these candle highs have been broken. These were the dominating candles, the dominating bearish candles. Those are out of the window once these two levels broke. So bulls are in control on the 4-hour chart and the daily chart, but down on the weekly. So there's a bit of a mixture there. So we got to be careful that the price could go up, but we have to be careful that if it retraces higher, that last week's high is going to be a tough level. And it should be a target for any trades to the upside. All right. Looking at the hourly, what do we see here? We see upside, uptrend, retracements, and we see bullish candles. So these are more or less dips for buys. So if we get an engulfing twin like this, it could be another continuation signal. 15-minute chart already has it, but I think it's best to stay on the hourly chart. It's a toss-up if it's even not worth looking at the 4-hour chart. But the thing is that on a 4-hour chart, price is about halfway in between here. So sometimes it's if you only use price action, like what time frame would you like to take the trade is the question. But I think that this is if you always use the concept of trend, right? Trend, pullback, continuation, use price action to guide you when to take a trade, then I don't know if this is a strong enough pullback really to qualify. This looks like one push up still. So therefore I would probably prefer the hourly chart. And I would say that this is at least on a 4-hour, it's uptrend. This is a 1-hour retracement. So if we get engulfing twin, that could be the continuation. It's risky in the sense that we're trading against the weekly momentum. If you use fibs as a target tool, maybe actually let me do this. 122.90 is the target. $122.50 could be an important level too, but that's close by. That's a bit difficult. This entire thing is moving up, but it's not as fast as perhaps we would like to see it. But 122.50 could be a bit annoying. I'm not sure about this. Let's take a look at pound yen. All right, dollar yen, by the way, pin bar, but didn't close above this candle high. So if we get a candle close above these candle highs right here, I think that this is then a continuation signal of this channel on the 50-minute chart. Remember, we're looking for basically a break of this little channel right in here, which is a counter trend channel compared to the bigger uptrend on the hourly chart. You see, uptrend channel, correction, looking for a bounce here for continuation. So if we get a break above these candle highs, oh, that's it. So let's take a look at this candle. All right, the close is 65, the high is 68, the low is 65/8. It's okay-ish. So that looks like a break right there. It's not a perfect trend, Could also wait for the hourly candle to close, by the way. Might be a bit safer. I might even use this candle low, actually, just riding this momentum. But an hourly could be better. If the hourly candles closes as engulfing twin, that could be a bit better. Let's see. Let's keep an eye on this hourly at the top of hour 30 minutes from now. So pound yen is, let's check. Same story in a way. Big wick, but the candle close is bullish. I don't like buy either way at this moment. No, not interesting. All right, so the dollar yen, euro yen upside could be interesting if we get engulfing twins like on this euro yen hourly chart. Maybe I'll put the stop loss actually a bit lower at 47. 47, just below this low. All right. Those are the pound yen and euro yen. So euro dollar, once again, looking for candle close above these candle highs. All right, moving on. Let's see. Any other? No, that's about it, I guess. So let me answer Z10's question about the MACD. Basically, when you look at Elliott waves, you can use the MACD or the Awesome Oscillator. Let me put on the MACD. I use the Awesome Oscillator myself, but you can use it to indeed read waves. And the thing is that what you're looking for regarding waves is, let's see. All right, look at this trend. You can use the oscillator here to understand that, this is basically what the waves are. So you can, instead of looking at price action, you can see that this is the strongest momentum, right? So this is wave 3, this is weaker momentum, so this is wave 1. Here price has gone back to the zero line. That means that this is a wave 2 correction. And here it went back, didn't go back to the zero line, all right? But this is the wave 4. Sometimes you gotta make an exception. But ideally, waves 2 and waves 4, oh no, this is the wave 4 actually. We're still in the wave 4, excuse me, kind of mixed up. Ideally, waves 2 and 4 are when the MACD goes back to the zero line. Waves 1, 3, and 5 will then have dips below it in the downtrend. Wave 3 will be the strongest momentum, will be stronger than wave 1, and wave 3 will be stronger than wave 5. And you'll have divergence between wave 3 and wave 5. All right, this is a typical scenario where you have price moving like this in a 5 wave, and the oscillator should show this. Accompanying with price here. All right. So as soon as this goes to the zero line, that you know that this is one piece of swing high, swing low. This all the way from here down to here is one swing high, swing low. As soon as price went back to the zero line here. So that's using it for impulse, but you can use it also for correction. You can use again, the oscillator for determining swing high, swing lows. All right. So you got upside here. This is one leg from here to here. This is another leg from here to here, and then there's another leg from there to there. So you got 3 legs. All right. Then you get another leg here, and another leg from here to here. So what is this? What is this formation? So if you start to look at these swing highs, swing lows, could it be a 1, 2, 3, 4, 5? Is it an impulse? No, it isn't. Because of the Elliott wave rules, basically, you can see there's a lot of problems with this. Right? 4 goes into 1. It's sometimes possible in certain cases. In this case, due to the overall structure, it doesn't look very likely. All right. There is the question if wave 3 is not the shortest, almost 580 pips. It can never be the shortest. All right. It's not the shortest, but it's very, very close. All right. So this looks more corrective. This looks like, for instance, an A, B, C, which finished a bigger W, and this is an X, and this is a Y, for instance. So you can basically use the oscillator to identify swings. This is a swing high, swing low, and this is a swing high, swing low. 1, 2, 3. And then we see a big corrective zone after that. So this is an A, B, C. All right, so that's how you can basically use the oscillator to get an idea about the swing highs, swing lows, and then you have a better idea about the wave formations as well. Let's take a look at the hourly chart. Last example. Here, for instance, we get one push down on the hourly. You see that from here to here. So this is one swing high, swing low. So this is, at that time, it could have been an A or 1. All right, and this is going to be a 2. Now, how far is that 2 going to go? Then in that case, we can put a fib from here to here. And typically, it would go deep, a wave 2, but in this case, it didn't. It only went roughly to the 38.2 fib. All right. Within this wave 1, if we zoom into the 15, we would see waves within that wave 1. Let's take a look. All right, let's take a look at this. And you see this is a swing high, swing low. This is a correction, and we get a new swing high, swing low, again a correction, and one more push lower. So in this case, we'll be labeling this as a 1, 2, this is a 3, this is a 4. And you might wonder, isn't that close to 1? It is close. In fact, it depends where you have the wave 1 ending. You could easily end it, let it end here, and then it should be fine. And this is just part of a wave 2 correction. It's not typical, this wave 2, but obviously we're looking at a 50-minute chart in a highly leveraged market. And if you look at a highly leveraged market, then it's actually technically wave 4 can enter the space of wave 1 within a few pips, like an intra-candle perspective. All right, and this is the last push, which is corrective, slow, and is showing divergence with the wave 3. Most importantly is that the wave 3 is the strongest here, and is stronger than wave 1. Let's see, it should be at least, it's barely, it's about the same actually. But that would be typical. It should be the strongest. It shouldn't be weaker, at least, at the very minimum. All right, so 50-minute chart is always a bit more difficult. It's easier to see it on the hourly in this case. But the point is that you can decipher basically as you go lower and lower. On the hourly chart, we saw that this was one swing high, this was a swing low right here, and then we got one push lower. This is all one push until we hit this moment, right here. All right, and within that push we had on the hourly, we had pullbacks within that push, right? On the hourly chart, you can see a lot of pushes here, boom, 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 and as it continues to fall and fall. So from that perspective, that 4-hour push on the hourly, I have it actually as 1, 2, 3, because this is the biggest oscillator push. That's the wave 3. And this is all an extended wave 5. Now I have to admit that the MACD looks a bit different. I used the awesome oscillator. Let's take a look at the difference. It's not much different actually. Okay, maybe because of the coloring, the green and red, I like it a bit more. But all right, so this is the end of wave 3, and this is basically wave 5 extension. Within that wave 5, this has to be the wave 3 because it's the biggest oscillator, and this is all wave 4s and 5s. Wave 4, wave 5. No, wait, let's see. I'm not sure. Let me get my wave analysis. I'm not sure by heart here. Here you can see 3, 4, 5, 4, 5, right? And within 5, you have another 1, 2, 3, 4, 5, and another 1, 2, 3, 4, 5. So you have 2 extensions here within those wave 5s. Alrighty, so let me get rid of these. So any questions? Any questions? Let's take a look what's going on maybe now. Do you have any pairs you want to take a look at? Anything you want to discuss right now? Let me know. Let's take a look. 4-hour chart. Getting close. It's pushing against these candle highs. So we'll see soon, I guess, find out if it can close above those. That would be a continuation signal, in my view. Dollar yen close to being engulfing. 18 minutes left. We'll soon find out if it's a good candle close near the high. I think that's a good setup. Already, this candle high broke the last one. So if it's a good candle close near the high, I would say it's engulfing. Euro yen looks the same. All right, let's take a look at the Aussie. The Aussie is going sideways. There was some bearish pressure here, but it didn't really go anywhere. It's still going sideways. Let's see if it can challenge this level or if it breaks further. All right, Kiwi is right at that trend line. If it breaks, then it will be a continuation of the engulfing pin bar we had here. Basically, Dollar CAD is also continuing its fall. And Euro odd, let's see how this hourly candle closes. That'll be interesting. Is this a retracement for more downside, or are we going to get a bit bigger correction even? I think personally I would expect something like this to happen on the Euro odd as well. But let's see which one is stronger, the Euro odd. Let's face it, both are moving up against the dollar. So the Euro odd might be a good one to skip because it could be not so good actually from that perspective. Yeah, if I had to choose, I would probably skip this one. I think that Eurodollar has a good potential. The Aussie has a good potential. I think that Kiwi, same thing. Dollar yen, Euro yen. Those 5. Dollar CAD 2, but that's already on its way. And I think that as soon as this candle closes, something like this, we can easily move a stop loss to above that candle high. If you want to catch the hourly momentum, you clearly see if this closes like this, you have a close below the candle low, below the previous candle close, below these bottoms. That looks like a good continuation. That depends how tightly you want to manage that trade, but nothing wrong with moving to break even. All right, so yeah, last week Thursday we talked a lot about what these candles mean. How basically the candle size is important, the candle close near low or high. We talked about, uh, let me think here, the size, the candle close, and wicks, of course. Sorry, wicks, right? Very important, those three things. But also, later on in that webinar, I gave you examples about, no, later on, actually, I talked about the candle closes versus the previous lows and the previous closes, right? Also very important, right? Look at these candle closes nicely being equal to each other, right? This one is higher, and we got a push up, but it found resistance and then closed lower again, right? And then you got a continuation. So all of this is telling a story, really. And I gave you a couple of examples, and now we're looking at the same info, but from a live perspective. So I think we got a great candles, really, all in all, on a couple of pairs, like the Euro and the Aussie. I think we have, and the Kiwi, I think we got some good candles. Now, of course, this is different than last week, Thursday. I could show you right away what the answer was and how it developed in those examples. Now we have to wait and see if it does continue. And we never know. This is a live environment, so only time will tell. We'll find out tomorrow. But I mean, looking at these candles, I think we got great examples of some good bullish bars. And well, we'll see. This one is not really completed as yet, but on the hourly, at least the 50-minute, it was, but probably hourly is a bit better in this case. All right, Aussie's moving up again already. Just a shallow pullback here. And wasn't even able to break below these bottom lows, in fact. So maybe it was not that bad of an idea, actually, to continue. It is a strong momentum. So it was maybe not even that bad of an idea to go long in here. You can see that sometimes it's really difficult for price to retrace. It's pushing up already, in fact. Well, on almost all time frames, there are bullish candles. So from that perspective, except the 15 is going sideways. So let's see if this 15-minute can control this candle. But otherwise, looks like we're going to get a continuation as expected. Kiwi also pushing slowly but surely. Eurodollar too. All right, now if you want to see almost the opposite of this for the fun of it, then I'll just show you another way of looking at the charts, and then we'll go back to this. This is nice because it's looking at candles pretty straightforward, right? Now the opposite if you use a lot of indicators, right? So let's take a look at an example, and then we'll go back to this just for fun for 2 minutes. All right. So here you got a lot of info, right? And this could be sometimes difficult, right? But it depends. This is the system I use, and I actually like it a lot. So I like you looking at both, really. I not only look at price action. I think it's possible. I think you do need a good grasp of charting to be that simplistic in looking at the charts in a way, because you have little information on it. I think that the candles do provide a lot of information, but I do think actually to look at only price action, you might need a bit more experience almost, in a way, because you don't have the extra information there. Now, I like to look at this because these bottom indicators give me confidence in momentum. And I like to use the top one as my guidance for momentum. So for instance, here, I see I got a strong green candles, I got green momentum. So that for me is already enough to say momentum is up. I got my green fractal here. So what I'm looking for now is basically a 4-hour continuation. I want the momentum to come back, and I want this to turn green again. And that would be a 4-hour setup. Same like what we're looking for on price action, in fact. Hourly, there's no momentum. 50-minute chart, there could be momentum at this moment. So if there's momentum on 15, I look at the 5. Basically, I'm always looking for finding momentum on one time frame, zooming in. Right? Let's take a look at the diagram. Momentum. Yes. Zoom in to lower time frames. No. Skip that pair. Right? So if there is momentum on the hourly, I look at the on the 15. I look at the 5 in that case, right? Or if, let's say if there is momentum on the daily, then I look at the 4, right? If there's no momentum here, there's loss of momentum. That means I stick on the 4-hour. If I find momentum here, then I zoom into the hourly. If there's no momentum on the hourly, I stay on the hourly. That's basically the way I work, right? If there is momentum hourly, I can even move to the 15. If you're scalping, then you could use the same for 15. There's momentum. No momentum on the 5, I look for continuation. If there's momentum on the 5, you could theoretically even go to the 1 minute if you're scalping. All right, and then in that case, I'm looking for, you see momentum here, I'm looking for a pullback and the first moment of continuation, which is here. With these arrows basically right here. All right, so, but that's a small trade, of course. Point is that, let's see if I can find a better example, perhaps. Let's take a look at the Aussie, right? Aussie, 4-hour was momentum, clearly. You got good momentum here, good momentum here, right? So hourly, what we're looking for basically is momentum loss. I mean, if there's momentum on the hourly, I would zoom in, but let's keep an eye on this hourly. So looking for momentum loss. So that would be here and here. So and then a continuation of momentum. So where are those continuation moments? That's here. Right, here's the momentum back. Right there. This blue arrow, that is here. And that is in here. Again, a setup. So these are 3 setups right there. 1, 2, 3. And they're all going good on the Aussie. Swing trades on the hourly, based on the 4-hour momentum. Now you see that easily with these indicators, right? But could you see that equally easily using price action? Probably, but you need to be experienced to see that. I mean, if you don't have these tools, I think it's possible, but it just takes a bit more experienced eye. So let's take a look at the Aussie again. So this is the exact opposite almost, right? And you see Aussie 1-hour chart. All right, so which ones would be the candles we're looking for? Well, I think that we could say, especially after this candle, we're in uptrend. These are smaller candles. I think we're staying in uptrend after that. So let's zoom in, take a look at the hourly after that. So looking at price action, one might take a break of this candle high, for instance, when looking at price action. This pin bar here. But you want to trade manage that probably and get out of that trade later on. These engulfing twins could be a setup. And probably this bullish candle. Yeah. So you can find them, right, as well. Using basically momentum, reading the momentum candles. Where is the momentum? Where are the momentum candles? On which time frame are the momentum candles present? and when you find those momentum candles, then zoom in, look for a pullback, and look for a continuation signal. So we got momentum here, then we're looking for pullback, and we're looking for continuation candles, turnaround candles. That's one way of doing it with the trend pullback continuation. Now others use candlestick patterns for reversal trades, right? They will be looking for pin bars after a good run up or good run down and looking for a reversal. That's also one way of doing it, right? What I was focusing on today was basically trend pullback continuation, looking for that continuation spot right there. So that particular approach allows traders to trade with the trend, but get a bit of a discount, but not anticipate the turnaround, because you never know how far the retracement can go. The thing is that when you have the retracement, it could go further than we expect, and if you take it too early, if you take it at a fib, for instance, it could continue against you. But if you wait for sufficient bounce, then there's a good chance of continuation. Now, sufficient bounce, of course, is the candlestick pattern. Now, if the bounce takes too long, then what could happen is this. Let's take a look at a blank chart. So if you get a continuation, you get a trend, right? You get a pullback, and you get a good bounce here, let's say, here. All right, so we take the trade in here. But the trade takes a bit too long and starts going like this. Well, then you want a trade management, and you want to tighten the stop loss, get out of that, because if it's going sideways, that means that this could happen, and not this. So when you get the bounce here, you want to monitor if you're getting the continuation or not. Now, how much time you give? Well, I use a 5 to 6 candle rule, for instance. Let's take a look. I know, this just popped in my eye right here. Engulfing twins, we got momentum to the downside. So let's say I take the trade right there. All right, how much time do I give it? Well, we got 2 candles. All right, but we got already a lower low here. So that's fine. You get almost an immediate continuation on the 4-hour. 5 to 6 candles not breaking the low here happens here. So anywhere in here would be my exit, market exit. Now, it depends. It doesn't have to be, because if I think there's still strong momentum, I might want to even live through this pullback and say I just move it at break even and try to live through that pullback for one more push down before I really exit, right? That depends on the larger time frame context too. All of these engulfing twins here, in a way, right, went pretty fast. All got continuation with a couple of candles. All had immediate higher highs, higher lows, almost immediately, and continued with that. So if you don't see that, let's say I took a trade here somehow, and I don't see it. I see a bearish candle and then failure here. 1, 2, 3, 4, 5th candle is a bearish one here. Well, then it could be good to exit, take a smaller loss, half of the loss perhaps, but this is not looking like a continuation. Unless you had the stop loss maybe all the way down here, then and you're trading it on a higher time frame, it could still be worth living through this pullback. But if you have a long here, you have a stop loss, tight stop loss here, and you see failure here to continue with the momentum, and you have a tight stop loss, then it's better to exit. If you have a wide stop loss, depending on the higher time frame context, it might be worth still living through the pullback. But I think you clearly can see the difference between this, obviously, and this, right? Momentum continues. Here, engulfing twins. Maybe I'm just now seeing the ones that work well, but you got a continuation immediately. Let's try to find one that fills again. Let's see. Maybe a different pair. Let's take a look at, I don't know, quickly at pound yen. All right, so here, there are a couple of examples. Here there's a pause, here there's a pause. So anytime there's 5 or more candles, you got to pause, right? And then you have to decide, is it worth living through the pullback or not? In some cases, not. In some cases, this pullback really didn't mean much before we did get the continuation, right? So the best is when you have candle highs, candle closes, candle lows, continuing with that momentum. Then that's always preferable, obviously. Then you have more confirmation of a follow through. So the quicker it continues, the better. And if it takes too long, it's just more risky, and you could get a big pullback, and that's dangerous if you have a tight stop loss. All right, does that make sense? All right, so we got top of the hour, pound going sideways. You got 3 candles, really going nowhere. Look at that, and I think that I don't like this particular structure, as I already said. Eurodollar 4-hour candle did not close yet. Let's see if it's able to push above 113.60, I guess, roughly. Dollar yen, engulfing twin, close. Look at that, close above the candle high. Bullish candle, decent sized candle. Got a bit of wick here, showing support. I think that candle close above the previous candle close, above the high, looking fine. So I think that's a good 1-hour candle. We got good decent 4-hour candles. As I said, there's a lot of momentum here, so that's the risky part about this, right? So that's a bit of a factor we have to realize. But at this point in time, I think there's looking at like a swing trade on the outer, small swing trade on the outer. I think it looks okay at this moment, considering the 1-hour engulfing twin. Euro yen is showing the same, in fact, right? Engulfing, and that looks like a continuation as well. But 125 is close by, but 122.50, sorry, but seems to be probably actually breaking. 122.50 was already respected here. So this is the second push with a good candle close right at that resistance. When you have candle closes that are right at resistance like that, the resistance is probably going to break. I think there's a good chance resistance is out of the window here at this point, looking at this momentum candle. So dollar yen, euro yen, sorry, look like continuation setups. Aussie, we have to zoom into the 15. Failed again, did not manage to break through this level that we're looking at. Can't break through, can't close above it. So anyone who's in it might want to get out of it, I guess. But still, this is only the 4th candle. So 2 more candles and we're getting a bigger correction on the Aussie. A doji on the hourly. Probably better to wait for retracement on the Aussie. The Kiwi 4-hour candles, it's a 4-hour trade, so best is to look at the 4-hour candles. And last but not least, pound odd. Robert is asking about pound odd. We can take a look. I was saying pound odd is, I forgot what I said about pound odd, to be honest. Did we look at pound odd even? I don't remember. We didn't look at pound odds. That's why. All right, so let's take a look. Bullish monthly, bearish weekly, bearish daily, bearish 4-hour. Looks more bearish except the monthly. All right, 15-minute chart. Same like the euro odd and pound odd in Aussie. It's bullish on the Aussie, but we're seeing a bit of retracement here. So probably best to wait for this 15-minute chart. I think we Could see a retracement to, let's take a look. To this candle low, 95.50. Probably see a bear flag. I would expect a bear flag. And anywhere around 95.50, 96, there should be a turnaround here, I would say. All right, I don't think I have much to add. I don't think that I'm really missing anything, but if price doesn't make the bear flag, then it's going to close. We'll have to close below these lows. But I think the chances of a bear flag are looking pretty good now, to be honest. All right. So that seems the most likely at this point, at least. All right, folks. Well, thank you so much for being here. Let's see. We got webinars again, of course, later this week. Let me grab those to your attention. So we got tomorrow. We got to take a look at strategy. Very curious how these things pan out. So we can discuss that tomorrow. See what went right, what went wrong, and make new analysis. Strategy webinar. I promised last week we'll focus on fibs and oscillator. The fib and alligator. I think I promised that last week. So that will probably be the topic of tomorrow. We got Wednesday evening, then it takes a look at the strategies for swing trading. And then Thursday, we complete the price action focus with part 2 on 4 p.m. at 4 p.m. GMT time. So I hope to see you in these webinars and wish you great trading. Cheers, everyone.